Hello, good day to everyone, and especially to our instructor, Ma'am Zia Belisario. And we are the last group, and we are able to discuss the last chapter, this particular subject. So the title of our topic is How Well I Am Doing, Financial Statement Analysis. In this chapter, we focus on the analysis of financial statement to forecast the financial health of a company. So we will be discuss the use of trend data, comparisons with other organizations, and financial ratios. So the subtopics of these chapters are the limitation of the financial statement analysis, statement of comparative and common size form, ratio analysis the common stockholders, ratio analysis the short-term creditor, and lastly is the ratio analysis the long-term creditor. So, what is financial statement? Financial statement, it is a historical documents. They summarize what has happened during a particular period. So, most of users of financial statement are concerned about what will happen in the future. So, for example, the stockholders are concerned with the future earnings and dividends. Creditors are concerned with the company future's ability to pay its debt. So it is historical in nature, so they can still provide users with valuable insights. So these users rely on financial statement analysis, which involves examining trends in key financial data. So comparing financial data across companies and analyzing financial ratios to assess the financial health and the future prospects of the company. So the ratios provides indicators of how well the company and its business units performing. So in addition to the stockholders and creator, managers are also vitally concerned with the financial ratios discussed in this chapter. So the specific ratios selected depends on the company strategy. So for example, a company that wants to emphasize responsiveness and to customers may closely monitor the inventory turnover ratio, which we will discuss later in this chapter. However, because the manager must report to the stockholders and may want to raise funds from external sources, manager must pay attention to the financial ratio used by external investor. The limitation of financial statement analysis was divided into two, which are comparison of financial data and the need look beyond ratios. So the comparisons of financial data, so comparisons of one company with another can provide valuable clues about the financial health of an organization. So unfortunately, differences in accounting methods between companies sometimes make difficult to compare their financial data. So the next one is the need look beyond ratios. Ratio should not be viewed as an end but rather as a starting point. Although the financial statement analysis is useful tool, it has two limitations involved: the comparability of financial data between companies and the need to look beyond ratio. So, for example, if a company values its inventories by LIFO method and another company by the average cost method, then direct comparison of their financial data such as inventory valuation and cost of goods sold may be misleading. And sometimes enough data are presented in the footnotes to the financial statement to restate data to a comparable basis. Statements in comparative and common size form. Dollar and percentage changes on statements. Horizontal analysis, also known as trend analysis. It involves analyzing the financial data over time and can be more complicated than showing year-to-year changes in each financial statement item in both dollar and percentage terms. So guys, as we see sa graph, nganing Bricky's Electronics Comparative Balance Sheet, December 31, 2007 and 2006, dollar in thousands. So makita na to diri sa graph ang assets. Under sa assets is a current asset, cash, accounts receivable, inventory, prepaid expenses, total current asset, property and equipment, land, building and equipment, total property and equipment and total assets. So sa ubos nga part is makita na to ang liabilities and stockholders equity. So makita na nato tanan guys nga nanang mga title diya. So kung atong tan-awon sa right part sa graph, makita na to ang 2007 and 2006. So nagid sila kalahian guys, then makita na to nga ang pag-solve sa amount o percentage. So ang 2007 is i-deduct sa 2006. So example sa cash, 1,200 minus dollars minus 2,350. So ang total niya guys is nga amount is $1,150. So enable to get 48% guys. So nara ang guide sa ubos or ang formula. So example, there is a cash decrease by $1,150 between 2006 and 2007. So this decrease expressed in percentage form is computed as follows. So example, $1,150 nga amount is i-divide nimo siya sa 2006 nga cash, which is $2,350. So ang result niya guys is 48.9%. So from cash to padulong diri sa total liabilities and stockholders equity, same lang siya unsaon siya pag-solve guys. Pero makita na to diri sa nga part nga diri sa stockholders equity kaning prepaid stocks. Makita na to diri nga 2000 sa 2007 ug 2006 same lang sila og amount. So wala na gisolve diri guys kay zero naman ang amount nga nakabutang. So wala na siya gisolve para makuha yung percentage taman sa total paid capital. So again, from the assets, liabilities and stockholders, same lang sila og formula para makuha ang percentage kung decrease ba or increase. So diri sa exhibit 14-2, makita na diri nga Bricky Electronics Comparative Income Statement and Reconciliation of Retained Earnings for the year ended December 31, 2007 and 2006. So dollar in thousands. So sales guys, sales padulong sa net income. So makita na to nga na siya percentage, percent and amount. So ang formula ani is same lang ganina sa exhibit 14-1, which is isubtract si 2006 and 2007 and the total amount which is divided in the year 2006 para makuha ang percent. So example, diri sa sales, from 2007 and 2006, $52,000 minus 48,000 is $4,000. So para makuha na to ang 8.3%, ang solution ani guys is kini si amount which is 4,000, i-divide nimo siya sa $48,000 nga amount ni 2006, mo nang ang result is 8.3%. Same sa cost of goods sold, i-divide nimo ay i-deduct nimo si 2006 and 2007 para makuha nimo ang amount nga 4,500. Then ang amount nga 4,500 is i-divide nimo siya sa 31,500. So makuha nimo ang 14.3% and so on until maabot nimo sa net income. In addition, horizontal analysis can even more useful when data from a number of years are used to compute trend percentage. Now to compute trend percentage, base year is selected and the data for all years are stated as percentage of that base year. So next is the McDonald's Corporation Trend Analysis and Net Income. So in Exhibit 14-3, in 1990s, many companies got into the practice of reporting pro forma earnings to investors and analysts instead of GAAP earnings. So while there were no rules for pro forma earnings, companies typically excluded items such as depreciation, goodwill amortizations, restricting charges, unusual gains and losses, and stock options related, and compensations expenses that depress earnings. So makita na to sa graph guys. Ang blue is the sales and net income. So sa left side makita nimo ang 0% to 250%. Then sa baseline is from makita na to ang year from 1998 to 2007. So in the above table, both sales and net income had been restated as a percentage of the 1998 sales and net income. So for example, in 2007, sales of $22,787 are 183% of the 1998 sales of $12,421. So this trend analysis is particularly striking when the data are plotted as an Exhibit 14-3. McDonald's sales growth was impressive throughout the 10 years period, but net income was far more erratic. So notice guys that the net income plummeted in 2001 and 2002, but fully recovered again in 2007. So the next is the common size statements. So vertically, analysis focuses on the relations among financial statement items and that given point in time. So while common size financial statement is vertical analysis in which each financial statement item is expressed as a percentage. So makita na to sa table guys. There is a Brakes Electronics common size comparative balance sheet in December 31 and 2006, dollars and thousands. So lahi ni siya style ganina from Exhibit 14-2 guys. Kani si Exhibit 14-4 makita na to diri the year 2006 and 2007 and the common size percentage 2007 and 2006. So para makuha na to ang mga percentage between 2007 and 2006 guys, na makita nga guide diri sa ubos or formula. So for example, diri sa year 2007, so diri ta mag-base sa assets. First is the cash. So si $1,200 i-divide nimo siya sa total assets which is $31,500. So makuha nimo ang 3.8%. So same sa accounts receivable, 6,000 divided by $31,500. So ang result is 19.0%. So same sa liabilities and stockholders equity. So si accounts payable nga $5,800, i-divide nimo siya sa total liabilities and stockholders equity nga $31,500. So makuha nimo guys ang 18.4%. So same siya sa 2006. Pero sa 2006 diri ka mag-solve gyapon sa iyang total assets nga na-align sa year 2006. So mag-start sa current asset sa cash, accounts receivable, inventory, prepaid expenses, total current assets, properties and equipment, land, buildings, and equipment. So same sa liabilities and stockholders sa year 2006, same lang gyapon formula. Ang total liability, so ang value po diri sa liabilities and stockholders equity, so kaning mga account title sa taas is ang result ani nga amount is i-divide lang nimo siya sa total liabilities and stockholders equity para makuha nimo ang percent. Same sa 2007 and 2006. But try to look guys ang total assets ug total liabilities and stockholders equity. So constant siya, remain lang siya nga 100%. Kay di naman siya nimo pwede i-divide sa iyang kagalingon. So 100%. So in addition, in a period in which 100 companies in the Nasdaq index reported as a GAAP loss of 82.3 billion dollars, the same companies reported the pro forma profits of 19.1 billion dollars. So if you want to report a profit instead of a loss, excluding inconvenient expenses like depreciation sure helps, because of the perceptions of the pro forma earnings were deliberately conducted to mislead investors. So the next is the Brekis Electronics Common Size Comparative Income Statement for the year ended December 31, 2007 and 2006. So dollars in thousands kaya po ni guys. So horizontal analysis, which was discussed in the previous section, examines the changes in financial statement item over time. So income statement, all items are usually expressed as a percentage of the sales. So in balance sheets, all items are usually expressed as a percentage of total assets. So nakita na to ganina guys sa exhibit 14-4 contains common size balance sheet of Brekis Electronics. So there is a exhibit 14-5, it contains the common size of income statement. So ganina balance sheets ang 14-4, so diri is 14-5 is income statement for the company. So ang formula diri guys is makita na to na siya sa ubos. Lahi siya ganina kay ang total asset man to ganina is mo gihimong divide sa amount sa by year 2007 and 2006. So dire sa income statement, ang sales mao'y gihimong nimo siyang gi-divide sa mga account title. So for example, diri ta mag-start sa year 2007 sa cost of goods sold, which is 36,000. So si 52 si $36,000, i-divide nimo siya sa $52,000 nga mao si sales, makuha nimo ang ang percent niya 69.2 rather. So same sa 2006, ang 31,500 nga cost of goods sold, i-divide nimo siya sa sales nga $48,000. So makuha nimo si 65.6%. And so on. And until maabot nimo siya divide sa net income. So same sa 2007 o 2006. So sa net income is $1,750. So i-divide nimo siya sa $52,000 nga sales. So ang total ani is 3.4%. So same sa 2006, ang total net income is $2,240. I-divide nimo siya sa $48,000. So ang result is 4.7%. So that's all my topic guys, and for the continuation of our report, Jeff Pasco will continue the report guys. Thank you.